Hi, I'm Jimmy. In this video, we're looking at Intel stock, ticker symbol INTC. Now, Intel's a stock that I personally own, and if you haven't noticed lately, Intel stock is down a decent amount. So, we're trying to answer the question, with it down, do we buy more? Do we sell what we have, cut our losses, or is this a stock we want to continue to hold for the long run? To answer that question, ultimately, what we're going to try to do is we're going to try to look at the road Intel took to get to this point. Where are they trying to go? Then we got to try to come up with a fair value for Intel stock today based on the information that we have today. I'll touch more on this later. And then we'll come up with what my personal investment decision is going to be. And then you can let me know what you think. Okay, now before we jump into that, I just want to show you real quick our investing platform called investorsgrow.com, which basically is set up to make investing a bit simpler. So let's say you wanted to value a bank. Well, when you're analyzing a bank, price to book is generally the best valuation method. The website will show you how to do that. Basically, it's a way to make analyzing businesses or stocks simpler. Okay, now back to Intel. So this is a chart of Intel stock going back the past few years. And as we can see, stock's getting killed. Well, towards the start of this, right before I bought my shares, Intel had announced a delay in their 10 nanometer chip. That happened right about there. Well, I ended up buying my first set of shares shortly after that. Well, Intel continued to climb higher for a little bit and then continued to pull back a bit more. And I still like the stock, so I jumped in and bought more shares down here, giving me an average cost of a bit under $38 per share. So from the time that I bought my shares, the total investment for me is down about 36%. So as you can see, not that great. Okay, now to understand how Intel got in this position, I think it's important to look at Intel's road to today. So when we jump over to the next chart, this chart goes all the way back to the 1970s. And Intel was one of the primary leaders of this industry forever. So this timeline is an approximate guide as to when different chips were brought to market. if we're curious, it's about a UM is micrometer. It's basically a millionth of a meter, while NM is nanometer, and it's a billionth of a meter. So basically, chips are getting smaller and more powerful. Well, I went back because I was trying to understand which companies in history were the first to bring each generation of chip to the market. And we can see that Intel was the dominant player for a long, long time. Now, I will point out that these are not all the chips. There are certainly intergenerational chips at similar sizes, but rough estimate, I think this will kind of give us the story we need. The obvious thing to notice here is that Intel was the player for a long time. And then around 2016, 2017, they clearly were no longer the leader because Taiwan Semiconductor took over as Intel lost the leadership role. Now, to understand how they lost leadership and ultimately how the stock started falling over the past few years, let's zoom in to the decade or so before the stock really started to decline to understand how this happened. Now, again, the example I'm going to show is not the only reason. There's certainly more factors to it, but I think that this is a good illustration of what happened with Intel and ultimately how they lost their leadership role. And then we're going to use this information to try to figure out what the future will look like for Intel and ultimately help guide us as to what the investment decision should be for Intel stock. So in the early part of this decade, Intel was they were putting up a new building called what they called was Fab 42. They announced it in 2011 and they expected it to be ready, I believe, in 2016. This facility was going to produce their 14 nanometer chips, which were already on the cusp of coming out. And then they were already looking ahead. They were looking ahead to the 10 nanometer chip. This is the facility that was going to be leading that charge. Then in 2014, they decide to pause production of the facility. Now, the way I understood it, they built most of the facility, but they didn't put any of the equipment in. And to load up it with the proper technology and the equipment that is needed to produce chips takes a long time. It takes multiple years. They paused for multiple years. And then, as we all know, Taiwan Semiconductor was coming out with the 10 nanometer chip. they realized they were a bit behind and they once again unpaused their production and they start trying to finish off the Fab 42 location to try to catch up on their 10 nanometer chip. But importantly, they didn't start producing chips at the Fab 42 location until about 2020. Now, I think that the most important part to focus on here is the pause in the middle. Why did they pause and how did that impact things? Well, that pause ultimately killed Intel's ability to compete for the high-end part of the market. So you have companies like AMD, which uses Taiwan Semiconductor as their foundry services. AMD was able to produce the next generation of chips while Intel was not. Now, the Fab 42 location was not the only one. They had planned upgrades at the Fab 24 location in Ireland. That also got paused. That again led to production issues down the road. And as we know, those production issues stuck around for a long time because during this time frame, they didn't really upgrade or build the new facilities that they had typically done in the past. And I think it's key for us to realize the difference between, let's say, a company like AMD and Taiwan Semiconductor and Intel. The approach that they took was very different at the 2014 time period. So don't forget, Intel was the first to market with the 14 nanometer chip. And as we saw on the chart earlier, they were always the first to market with the most advanced chip. But now, for the first time, they start pausing, and where Taiwan Semiconductor is pushing money into their foundries and they're pushing money into the newest technologies to develop smaller node chips. Well, Intel wasn't doing the very same thing. I think that they got a little bit comfortable with their leadership position. In fact, in 2014, they announced that they expected to produce the 10 nanometer chip by 2016, and that clearly did not happen. Now, I think Intel at that time realized that they were a little bit behind. So what they did is their announcement of the 10 nanometer chip was supposed to be revolutionarily large. They announced that they expected there to be a 2.7 times increase in how small it got and also how productive it, how efficient the chip was. But the issue was that when I went back and read articles from that time period, well, almost universally, people were saying that's way too big of a jump. They're trying to make a massive jump from one generation to the next instead of making the more incremental improvements that they had historically always done, which led to their leadership position. Now they're trying to make a giant jump and get back in the lead. So I think the key takeaway here is that the pause was a giant problem. Instead of jumping to the next generation like they had historically done, they paused, they tried to make some minor improvements to the 14 nanometer chip, and then they tried to make a massive jump to the 10 nanometer chip. But while they were finishing up the Fab 42 location and catching up with all their other facilities, the industry was moving past them. So when we jump over to a chart of the more recent years that took place after that time period, well, again, they were way behind and now they needed to catch up. So to try to recover, well, Intel went ahead and brought in a new CEO. And initially, that new CEO was praised as being fairly good because he was more of a chip guy compared to Bob Swan, the guy before, and he was more of a finance guy. Well, shortly after they came out with the new CEO came in, he came out and announced that they were going to do their what they called IDM 2.0 strategy. And basically, it's building a bunch of locations. And this is real important because, again, think about that pause time period. Well, this is them playing catch up. So the first location I think is important to point out is the Ohio location. So Intel announced that they were putting up a new facility in Ohio and they were going to spend about $20 billion on that location. And they've started production or they started building the facility, but it's gone a bit off schedule. They originally thought that it was going to be ready by 2025. Now it's looking closer to 2027, maybe 2028. Okay, then we jump over to another big facility over in Germany. Well, in Germany, they were expected, as you can see on the chart here, they were starting out with numbers about 17 billion was going to be the cost. Well, those numbers have been up to about 33 billion. And originally, they thought that they were going to be ready for production in the 2027, 2028 range. And now that building hasn't even started production. They haven't even broke ground over there yet. And they're talking about potential production starting in 2029, maybe 2030. Clearly, these delays are a problem. Now we jump over to Arizona. Now, Arizona is not quite the bad news that the other two locations have. This is in Chandler, Arizona. This is actually an upgrade. By the way, Chandler, Arizona is the same location of the Fab 42 project we were looking at before. Fab 42, now they're introducing the Fab 52 and the Fab 62. Now, this one is going a bit more on schedule, and they're expecting for production, starting in 2021, they're expecting for production to be ready by the end of 2025. So this one is, in fact, on schedule, certainly compared to the other ones. Okay, now, with all this in mind, let's jump over and look at a chart of free cash flow, both historical numbers and analyst estimates. The dark blue bars are historical numbers, the green bars are analyst estimates. And if we're curious, using these free cash flow numbers, well, the fair value for Intel stock shakes out to be about $27 per share. That's about a 25% upside from the current price. But I hear what you're saying. Jimmy, Intel stock has looked undervalued every time I've done one of these videos, and it really has. But here's the issue. To identify why, let's jump back to the free cash flow chart. So this is where it gets tricky. Let's imagine we're an analyst covering the semiconductor industry, and we're covering Intel. And our job is to project not just free cash flow, but all the numbers. We're trying to project all of the income statement, cash flow statement, and the balance sheet. Well, what we have to do is we have to take the information we have today, what we know about the industry, expected demand going forward, expected pricing, expect what we expect for different chips to come out. And then we have to come up with our estimates. Well, imagine we assume that a company like Intel is going to have, let's say, free cash flow next year, because there's a lot of expenses coming up. They're going to have free cash flow of negative $5 billion. Well, then the company turns around and announces big changes to what they're doing. Let's say it's delays in the Germany plan. What you thought was going to be revenue from Germany in 2028, well, now that's delayed. So not only that, but costs, which you thought were $17 billion, are now $33 billion. So that's clearly going to drive the numbers lower. So for free cash flow, what you thought was maybe negative $5 billion now gets pushed down to negative 10. So clearly, projecting free cash flow becomes more difficult in this scenario. But my bigger concern is not even projecting free cash flow in any given year, but it's more how long do these problems stay in place? What if free cash flow, which is negative right now and expected to be negative, what happens if it stays negative longer? So clearly, projecting free cash flow is difficult when things keep changing, when the target keeps moving. But I think the other thing to keep in mind here, and the thing that I believe I didn't fully anticipate, was clearly free cash flow has gone negative. But free cash flow going negative might stay negative longer because of all the changes that management is making. Now, this $27 fair value that we saw before is based solely on the fact that free cash flow in 2027 is expected to be about $12 billion. If it's not $12 billion, well, the Intel stock is not worth $27 per share. And I think that based on everything we've seen, based on all the research that I've done, and I see all the delays that have come out, I thought when I first bought the shares that Intel they were doing what we wanted to. They were starting to put up new facilities. They brought in a new management team. I thought this was the right path. I didn't fully anticipate that by the time they get all these facilities up and running, they're going to be a decade or so from where the new CEO came in. And even then, it's difficult to predict. So, as difficult as this is for me from an investing standpoint, I think that selling my Intel shares now, taking my loss, taking the medicine, and moving those shares to a better investment makes more sense than sitting in something that is, frankly, in my mind, kind of a wish and a hope at this point. I don't want good money chasing kind of a dead investment, or let's say at least a delayed investment. So for me, on a personal basis, I'm going to be selling my shares of Intel, and I'm actually going to be using that capital to invest in Adcore. Adcore is a stock that I recently did a video on. It's a small cap company. It's more of a cyclical play. It's less of a buy and hold forever type of company and more I'm trying to buy towards the bottom of the cycle and hoping to sell when we have a good return, when the cycle returns strong. So if you're curious, I will leave a link right here and a link in the description below for the Adcore video if you're curious what company I'm investing in next. And if you'd like to sign up to get access to this website, I will leave a link to that in the description as well. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.